If you don't want to be stuck paying a mortgage for 30 years and you're interested in learning how to save tens, if not hundreds of thousands of dollars in interest, then you're in the right place. In this video, I'm going to tell you the truth about mortgage interest in Canada and show you some strategies on how you can pay your mortgage off early. But first, I'm going to quickly show you how mortgage interest is calculated here in Canada. Once you understand that, then you'll see why the strategies that I'm going to share with you today work so well. And make sure you stick around right till the end where I go over some actual live examples comparing different interest rates and different strategies and how that impacts your mortgage. So let's dive right into it. When people consider buying a home, they often only focus on the monthly payment and whether or not they can afford it. That's important, but it's just as important to consider the interest rate on the mortgage. Obviously, the higher the interest rate, the more you're going to pay on your mortgage, but what most people don't understand is how much actual interest they pay over the lifetime of that mortgage. Banks don't always make it easy to see those numbers, and they're often hidden within the payments. But today, I'm going to show you exactly what's going on. So here's what you need to know. Your monthly mortgage payment is made up of two parts. First, you've got the principal, which is the amount that you've borrowed and you have to pay back over time. And second is interest, which is the cost of borrowing money from the bank. Each payment goes partially towards reducing the principal and paying off the interest for the remaining balance on that loan. Now, here's the part that shocks a lot of people. Over the life of your mortgage, depending on your interest rate, you may often pay almost as much in interest as you borrowed, or even potentially more at times. For example, if you borrow $500,000 on a 30-year mortgage at a 4% interest rate, you'll end up paying about $356,000 in interest. However, if your interest rate is 6%, you'll pay around $570,000 in interest, and at 8%, you'll pay a whopping $804,000 in interest. That's pretty eye-opening, isn't it? So let's break down how interest is calculated on a mortgage. This will make it clear how you can reduce your interest costs and pay down your mortgage faster. So let's go over an example together where you can see exactly how this works. So let's say you take out a $500,000 mortgage at a 5% interest rate for 30 years. The first thing you need to know is your monthly interest rate, which is just the annual rate divided by 12. In your first month, your interest charge will be based on the full $500,000 of principal. Over time, as you pay down the principal, the interest portion of each payment decreases and more of your payment goes towards reducing the principal. Using a mortgage calculator, you can figure out the exact monthly payment needed to pay off the mortgage in 30 years. For our example, the monthly payment would be about $2,668. Over the life of the loan, you'd end up paying just over $460,000 in interest, bringing your total cost to about $960,000 for a $500,000 mortgage. That's why it's so important to understand how interest works. So now I'm going to go over 4 strategies that you can use in order to save on interest and pay your mortgage down faster. So if you take a look on the screen here, we've got the mortgage that we were previously talking about, $500,000 at 5% interest for 30 years. And if we calculate that, that will give us all the numbers that were already mentioned. $2,668 per month. You pay $500,000 on the entire amortization or the entire life of that loan, and your interest payments would be just over $460,000 for a total cost of over $960,000. And again, remember, this is for $500,000 in borrowing. However, let's start off with the first of the 4 strategies, and that is to make extra payments monthly, or realistically at any point in time, but for this strategy, it's an extra monthly payment. So if we're gonna make an extra payment, that is going to be at the same time as our regular payment. So if we have one payment a month, let's see what happens if we are to add $100 additional monthly. So with that additional $100 monthly on top of what we were already paying down, we can see that our interest payments came down to $418,000, and we can get a good summary right here showing us what the prepayment savings would be. So by the end of the mortgage, with that additional $100 in mortgage payment, you're going to save almost $42,000 in interest and pay your mortgage off 28 months sooner. So that is absolutely massive. And that's only an extra $100 a month or an extra $1,200 a year. Now, strategy number 2 would be to make even larger payments monthly. So let's go ahead and let's say that we were able to add in $300 a month, and let's see how that would impact our payments. Maybe you're progressing through your career. Maybe you got an inheritance. Who knows what that may be, but let's say you're able to do this and what that looks like. So with the $300 additional, we can already see interest payments down quite significantly. So looking at our prepayment savings, by the end of the loan, you would save $105,000 in interest and pay your mortgage off 71 months sooner. And that's just paying an additional $3,600 per year to get it done this much faster and to get this level of savings. Now, don't get me wrong, of course, not everyone's going to have the ability to do this. And in Canada, as you have to renew your mortgage every 5 years, this means that you're likely going to have a new interest rate in comparison to the old one. Typically, it's going to fluctuate in a relative range, but this means it can go up and down over time. So maybe there's times where interest rates are down, you're able to lock in a lower rate, or you take advantage of variable and you can put a little bit more money into your mortgage on a monthly basis, or you're just keeping your payment the exact same while your overall payment has gone down. So lots of different scenarios where this could come into play for you if you're able to, but some, again, massive savings over that period of time. Now, moving on to the next strategy, we're going to be looking at making a lump sum payment. So now let's say you receive a lump sum in the form of an inheritance or a bonus at work, or you've just been working hard and saving. Maybe you have some sort of a side hustle and you've got an additional $10,000 that you can put down at the start of year 2. So this is a one-time payment. It's not recurring, but if you were to do this at the start of year 2, let's see exactly how this would impact it. So by the end of the mortgage, with that one-time prepayment, you save $30,497 in interest and pay off your mortgage 15 months sooner. So over a year sooner, just based off that one $10,000 lump sum. So you can see this can be very powerful, even if you're not doing it on a monthly basis. And there is power to paying that up front sooner in the mortgage because your interest rates are going to come down sooner and it's going to help you over the long run, versus if you were to go in, let's say the 23rd year or something of that nature, it's not going to have the same impact. So the sooner the better, because at the beginning of the mortgage, you're paying off a lot more interest, whereas towards the end, it's a lot more principal. But if you can pay down the principal earlier on in the mortgage, then you're able to reduce your payments over the long run. Now, let's look at potentially the least known and one of the most impactful ways to pay down your mortgage faster and pay less interest. So let's reset everything that we had up here. And what we're actually going to do instead is just look at what is called an accelerated bi-weekly payments. So essentially what this means is instead of paying once monthly, 12 times a year, you're going to be paying every 2 weeks, which actually equates to 26 payments over the year and essentially 13 months worth of payments. And so if you have a job where you're paid every 2 weeks, it lines up pretty nicely and you shouldn't really notice any major difference. It will just move along with your bills. However, let's take a look at what those numbers look like if we are using the accelerated bi-weekly payments here. And so as you can see, by the end of the loan, you'll actually save over $85,000 in interest. And unfortunately, it doesn't show very well here the amount of time that you save, but we have another handy calculator, which shows us that, again, basically just over $85,000. However, it is actually 25.2 years that you're paying off the mortgage instead of 30. So you're saving nearly 5 years of payments. And the best thing is you don't have to use just one of these strategies. You can actually use a combination of whatever suits you best, whatever you're most comfortable with, whatever fits your lifestyle the best at the point in time in your life, and it can be changed over time as well. However, something that you absolutely need to know before locking into a mortgage is if there are any prepayment penalties or other things of that nature. Essentially, some mortgages don't allow you to do some of these sorts of things. They have restrictions on them. And that's why I always suggest speaking with a qualified mortgage broker who can walk you through this, guide you through the process. If you don't have one, I'm more than happy to connect you with a trusted professional that can give you a better overall understanding and recommendations based on your unique situation. So quick disclaimer, it should have been done at the beginning of the video, but I am not a mortgage broker. So please do not take this as financial advice, and please speak to a professional before making any major decisions. And something to note is that often when I've seen extremely low interest rates that banks are tossing out there to essentially draw people in, this is oftentimes where there are major penalties and there are major restrictions around how you're able to pay down the mortgage. So just be careful. If you see something that's too good to be true, it probably is. Dig a little deeper before you commit. And if you're interested in running some of these numbers yourself and looking at some different situations and different options that might help you pay down your mortgage faster, I will leave a link down in the description to the calculator that I use. It's on the government website and it's quite a useful tool, so feel free to check that out. And if you are thinking about buying, selling, or investing in real estate in my marketplace of Surrey Langley and the rest of the Fraser Valley, or even if you're outside my marketplace, I have a list of trusted professionals that I'd be more than happy to connect you with. You can scroll down and click the first link in the description to book a call with me at a time that works best for you. If you enjoyed this video, make sure you hit the thumbs up button so the algorithm will push it out to more amazing people just like yourself who want to learn more about saving money on their mortgage. Before you get out of here, make sure you check out another video on my channel, and we'll see you in the next video.